Hey guys and girls, in this lesson we are going to be creating a higher time frame EMA script. So this script is going to draw a higher time frame moving average over our intraday price action. In this case, we're going to draw a daily moving average over any of our intraday timeframes. So let's get started. First thing, as always, is I'm going to get some user input. And we are going to get 4 inputs here. The first one is going to be a resolution. So this is going to be an input.timeframe input. And I'm going to title this EMA timeframe. And we will give it a default value of the daily chart, or D for short. The next input is a length input, or LEN. This is going to be an integer, so an int input. And this will be our EMA length. And its default value is going to be a 50-period moving average. The next input we're getting is a color Boolean input. So this is going to be a bool input or Boolean input. And this will allow the user to change the color of the moving average based on whether the price action is trading above or below it. So I'm going to call this one color EMA, and we'll give it a default value of true. So by default, we will color the moving average based on whether the price is above or below it. The final input here that we're going to create is going to be called smooth. And this is also going to be a Boolean input. And this is going to be called smooth. And the default value is going to be false. And I'll explain what this smooth variable does in a moment. First, let me indent all of these to make them look nice and pretty. And let's move on to the next part of our script, which is calculating or retrieving the EMA value from our higher time frame. Before we do that, let me save my code, make sure there's no errors, and we're all good. So this section of our script is going to calculate our EMA. And I'm just going to create a variable here called EMA, and that's going to be set to the ta.ema function. And if I can spell, we're going to create this EMA value based on the closing price and our length, our period length, which by default is 50. And that is our EMA value. This is going to get the EMA value for the current time frame. But if we pass this variable into our security function, then it will retrieve the EMA value for our higher time frame. So to do that, I'm going to create a new variable here called EMA step. And this will be set to the request.security function. And for this function, we're going to use 3 of our inputs. The first one is just siminfo.tickerid. So we're just passing in the current market onto our chart. And we will pass in our res input, resolution input, for our time frame. So by default, that'll be the daily chart. And then finally, we need to pass in our expression, or what value we want to retrieve from this market and this time frame. And for today, we are just passing in our EMA value. But to avoid what is called repainting, and I'll cover repainting in its own lesson towards the end of this section, where we'll go into detail about what repainting is and how to avoid it. But for now, all you need to know is that in order to accurately get the EMA value, so that on historical bars, we get the EMA value for the previous day, and on real-time bars, we get the EMA value for yesterday, we need to check, is the bar state real-time? So is bar state.isRealTime true? If so, we want to get the EMA value with a historical operator of 1. So we want to get the previous day's EMA value. Otherwise, if we are on a historical bar, then 0 will also get the previous day's moving average value. So now if I plot our EMA step onto the chart and I save my code, we should be getting a daily 50 EMA drawing over our intraday price action. Now let me go to a Forex market that is currently trading that may be a better example of this. Here we go. If I zoom out a bit, the moving average is quite a distance from our intraday chart. Let's try a different market. This is a little bit better, a little bit more visible. So now we have our stepped higher time frame moving average drawing onto the chart. The next thing to do is get the smoothed version of this moving average. Now the reason why we need 2 different EMA values is because if I try to set our gaps, now first of all, the way we get our smoothed moving average value, if you haven't watched the previous lesson, I highly recommend you do watch the lesson on the security function. you will remember that we use gaps, the gaps parameter, to merge any gaps in data. So by default, the security function will continue drawing the last known value across our intraday price bars until a new day starts and we get a new EMA value, and then it will start drawing that across those historical bars. If we want to merge the gaps between days, or in other words, average out our line so it's smooth, we need to use the gaps equals bar merge dot gaps on. So we want to merge our bar gaps. If I save this code, we will be getting a smoothed EMA. But if I want to use this user input, this smooth user input to turn on or off this smoothed feature of the moving average, if I try to do that here and we say is smoothed turned on, then turn gaps on, bar merge dot gaps on, otherwise turn bar merge dot gaps off. If I save this code, we'll get an error because the value we need to put into this gaps parameter needs to be a constant Boolean, which means the value we put in here cannot ever change. It needs to be true or false always. So we can't have this ternary conditional operator here that changes based on whether the user clicks on that little tick box or not. So in order to get around this, what I need to do is copy this entire line of code, paste it into the value of our smooth, EMA smooth variable, get rid of the gaps parameter on our first step version, and then change bar merge dot gaps on for our second EMA smooth variable. So now if I save the code, this will compile just fine, but we now have two unique different variables for our stepped EMA, which you see drawing now, and our smoothed EMA, which is not plotting anywhere yet. In order to make this user setting work, the way I'm going to do that is I'm going to check is smooth turned on. If so, then plot the EMA smooth value. Otherwise, plot the EMA step value. And that's it. Now if I save my code, open up the settings, when I tick this smooth box, our ternary operator is now drawing EMA smooth, and we get a smooth moving average drawing over our intraday price action. And that's pretty much it for this script example. The final thing we're going to do is format this plot. The first thing we will do is change the color. So the way we will do this is we'll check, has the user turned colorize on, this col input variable? If so, then we want to check, is the current bar's closing price greater than the EMA step value? Question mark. If so, then set the color of the EMA to green. Otherwise, set the color to red. Now, because we put this in parentheses, this is a ternary operator within a ternary operator. We need to add one more else statement here. So we have is colorize turned on? If so, evaluate this. Is price above the moving average? Set it to green, otherwise set to red. And then otherwise, if col is false, if colorize is turned off, this color EMA setting is not true, then we just want to set the color to anything. Let's set it to color.blue, the default blue value. And then the final thing I'll do here is I'll thicken our line a little bit. I'll set line width to 2, and we'll title this plot Higher Time Frame EMA. And now when I save my code, we'll have a thick green moving average drawing over intraday price action that changes to red whenever price starts trading below our moving average. And that's it for the script. Now, obviously, the purpose of the script is that these higher time frame moving averages, these key moving averages, the 50 period, 100 period, 200 period, even the 20 period, there's a lot of different major moving averages that traders often reference to inform their trading decisions. You can now use this moving average as a support or resistance line, a dynamic support and resistance. So you can see here that price came down, tested the moving average, had a nice bounce, retested the moving average, and then we had this huge bounce off it. Depending on the context of that higher time frame. So if we have a bullish trend developing, prices making higher highs, higher lows, and then we pull back to that moving average, you can often get nice bounces off that moving average as it's acting as support. So if I throw on my replay tool to here, price is clearly in an uptrend in recent price action. If we drop down to our 1 hour time frame, zoom out a bit, here is our intraday tests of that high time frame moving average. If you drop down even further, there may be trading opportunities around here. Certain candlestick patterns, large bullish engulfing candle, for example. After we tried to trade below it, we failed. Nice large wick here, trading below the moving average, shows the buying pressure is kicking in here. If we go back even further, here we have a nice double bottom here, where price made one low, rallied off the moving average, traded back down to that moving average, and failed to break below the original low and the moving average. We've got a nice reversal pattern off here. And if you drop down to an even lower time frame, like the 5-minute chart, this pattern here would have made a nice reversal. So let's look at what that would look like. Drop down to a 5-minute. Here you can see price making lower lows, lower highs, and then suddenly we break the previous lower high in this downtrend, and then we pull back before taking off in the bullish direction. So depending on how you like to trade, there's a million ways you could approach this style of trading. You could just trade the retest, look for candlestick patterns right on this line. You could wait for a lower time frame reversal pattern like this, where price breaks a previous key resistance level on this lower time frame and then pulls back. You could buy down here somewhere, anticipating that breakout. There's a lot of different ways you could trade an indicator, such as this very simple high time frame moving average. And of course, you could obviously use different moving averages, simple moving averages, volume weighted. If you go and look at my multiple moving averages lesson in the indicators section, I have a whole block of code there that allows the user to select the moving average type. You could even implement that functionality into this script so that the user can select whatever moving average type they prefer to use. And finally, before we wrap up this lesson, let's just have a look at what happens when we change our time frame. So here are our settings. We can obviously change the length, the color option, the smooth option, and then we have our EMA time frame. And here we can select from any time frame, well, nearly any time frame. If we set it to chart, it will be the same time frame as our current chart loaded onto our screen. Otherwise, if we set it to any of these, it will obviously change to that time frame. So we could have the 4-hour EMA drawing, for example. Notice that you can only select from these inbuilt time frames. One way around this, if you want to use a custom time frame that is not listed here, is to change this input time frame into an input string. If I save my code, this should still work just fine. There we go. So we're using the daily chart, but now you can write whatever you want in here. So for example, I could write the 33-minute chart. So this will be in minutes. And because we are on a 1-hour time frame, this isn't going to draw properly. We need to go down to a lower time frame than the time frame we've selected here. So if we go down to a 5-minute time frame, now we are getting the 33-minute 50 period EMA drawing over our 5-minute chart. Anyway, that will do it for today's lesson. The source code for this very simple but very practical application of the security function will be below. Have fun playing around with it, and I'll speak with you in the next lesson. Take care.